Hi everyone, this is Dr. Nitin Chhoda and welcome to my channel. In this training video, I'm going to answer the question, have we been lied to about mortgage forbearance by federally backed lenders? It's unbelievable what's going on out there. Now, if you're not an existing subscriber yet, please click subscribe, please enable notifications. And if you are an existing subscriber, welcome back. Also, please click the like button because it really helps out the YouTube algorithm. With that being said, let's get into this article. In a recent Washington Post article, and the headline of the article was, mortgage relief was offered but at a high price. A lot of homeowners who fell behind on mortgage payments were told that they had to make an enormous lump sum payment at the end of their forbearance, but that wasn't true. Now think about this. If you're going to be getting mortgage forbearance, you fundamentally have three options. Option one, pay off a lump sum at the end of the forbearance period, which by the way is not practical and it's not something I would recommend you do, but that's an option that the lenders are going to try and offer you because they want to try and get their money back from you as soon as possible. And this, by the way, goes against the principle of the CARES Act. I'll get into that in the training video. The second option that you have is to pay off the amount that you owe in installments. And the third option that you have is to have that amount essentially added to the end of the loan, effectively extending the life of the loan. So let's say you have a 30-year loan and you're 5 years into the loan and now you get forbearance for 6 months. Your loan is now 30 years and 6 months. So you pick up 6 months later and then you continue paying with tomorrow's dollars, which by the way is the preferred option because with the effect of inflation, tomorrow's dollars are weaker than today's dollars. Remember one thing for all my subscribers, today's dollars and today's money is much more valuable than tomorrow's money because with the effect of inflation, it's between 2.5% to 3% right now in the United States. It can go up and down depending on how we recover from this pandemic. But every 16 or 17 years, and this is these are words from Howard Marks, who's a hedge fund manager, someone I really look up to. He said every 16 or 17 years, the value of your money declines by 50%. So if you've got $100,000 in your bank account today, 17 to 18 years from now, even though it'll still be $100,000, it'll only have $50,000 of purchasing power. So if you can have your mortgage essentially pushed back to the end of the loan, you're paying with tomorrow's dollars because 25, 30 years down the road, with the effect of inflation, with salary increases, you will hopefully be making more money and bringing in more money, but still paying the same amount of money that you were obligated to pay in the next few months. So again, try to have your loan, try to have the forbearance amount essentially pushed back to the end of the loan. And that, by the way, brings me back to what all of these lenders have been doing. And what they've been doing, it's not very good. And a lot of homeowners, and if you look at this article on your screen right now, a lot of homeowners followed the advice of government officials and contacted their loan servicers to talk about payment relief if they couldn't pay their mortgage. And to qualify for the forbearance, the loan has to be a federally backed loan. Under the CARES Act, the borrower had a right to ask for an initial forbearance for up to 120 days. And if additional relief is needed, by the way, this is law, they were entitled to an additional 180-day extension. So interest would still continue to accrue, but fees and penalties would be waived. Now, borrowers were actually offered by the lenders 90 days of forbearance. And this is the problem. Servicers told them that the past due mortgage payments would need to be paid in a lump sum once the forbearance ended. Now, this is the problem. A lot of banks have been offering their traditional or their default forbearance programs that they've had under normal times. But as a borrower, you've got to specifically ask for the CARES Act forbearance program, for the federally backed forbearance program. And the bank is required by law to offer up to 180 days of forbearance without late fees. Now again, the interest charges will still accrue. So you should have 6 months where you don't pay your mortgage, and after that, if you want, you can have another 6 months. Now when it comes to paying back this money, because you do have to pay back the money with interest, the lender is supposed to give you options to pay this money back and to give you several options instead of trying to force you to pay it all off with one lump sum. Now, I believe that what the banks have been doing is maybe they weren't organized intentionally, because I would hope that they didn't do this intentionally because they would be violating federal law. What the banks were doing is offering their internal forbearance program and not actually offering the CARES Act program. This is what some banks have probably been doing, which is why 90-day forbearances are offered, followed by, hey, you've got to pay it back in one lump sum. Whereas what they should be offering and what we as consumers should be asking for is, hey, I want the 180 days CARES Act forbearance, and I want either a payment plan or I want the ability for this to be applied towards the end of the loan. That is what we should be asking for. That is what we should be demanding, because that is true forbearance, and that does indeed give us relief during these tough times. And this is what really bothers me when I read this. When I read this from the Washington Post article, people complained about not being given any options other than making lump sum payments. That's not how it's supposed to be. And because of all of these problems, the Consumer Financial Protection Bureau and the Conference of State Bank Supervisors have put together a pandemic-related consumer relief guide. I'll actually link to the consumer relief guide in the description below. Kathleen Kreninger, the director of the Consumer Financial Protection Bureau, acknowledged in a news call that homeowners were not given the correct information. One of the challenges, she said, early on with respect to forbearance was the concern about what happens after the deferral period. A number of servicers were telling consumers that they would be required to pay a lump sum of the payments that were deferred after the forbearance period. That is not the case. And if you look at this consumer relief guide, and I encourage everyone who's thinking of mortgage forbearance or who has applied for mortgage forbearance to read this consumer relief guide word for word, but here are the highlights. You have the right to obtain 180-day pause in paying your mortgage or temporarily lower mortgage payments if you're a borrower on a federally backed mortgage loan and you affirm that you're experiencing a financial hardship due directly or indirectly due to this pandemic. The decision to request forbearance should be considered carefully. However, Congress has made this process very easy. Forbearance is a temporary reduction or suspension of your monthly payment to help you through a difficult period. At the end of the forbearance period, you and your servicer will discuss repayment options. In most cases, you should receive, this is the key language, in most cases, you should receive multiple options to repay the monthly payments that were not paid during forbearance over time. Now, this is the important part. You should not be forced into making lump sum payments at the end of your forbearance period. How are you going to do that? I mean, if you're finding it hard to pay your mortgage over 3, 4, 5, 6 months, how are you going to come up with 6 months of mortgage payments at the end of the forbearance period? It's not possible, it's not reasonable, and it goes against the intent of the CARES Act, of the clause of the mortgage forbearance clause in the CARES Act. Now, it also says there are no fees associated with obtaining forbearance, and be wary of anyone offering to help you with forbearance for a fee. Now, there is one more thing that I want all of my subscribers to pay attention to, and these are the scripts that the actual lenders are using and what their reps have been trained to use. So it says here that mortgage servicers who are handling federally backed loans have been given updated scripts to assure borrowers with loans covered by the CARES Act that they have a number of payment options available to them. So this is how it's supposed to be. You need to know your rights. And again, I recommend that after you watch this video, you click on the links below and you check out all of the scripts and the consumer relief guide. So let's take a look at the script that the lenders are using. And you can see in the script that step 1 is determine nature of hardship. In other words, the lender's representative will say, let's get started, tell me about your situation. So be prepared to answer those kinds of situations. Step 2, follow the script if a borrower has a financial hardship related directly or indirectly related to the pandemic. Introduce forbearance and then discuss all the options with the borrower, including various ways to pay off the mortgage. And again, my recommendation is when you talk with your lender, make sure you ask for your entire forbearance amount to be attached or to be essentially pushed back to the end of the loan. That is going to be the best thing possible for you. I hope you learned something from this video training. If you are an existing subscriber, thank you for watching. If you're not a subscriber yet, please consider subscribing and please enable notifications so you get instant updates like this. My goal is to bring you information that you're not going to see anywhere else, information that will allow you to save money and ease your burden that you're going through financially, economically, even mentally and emotionally. That is the purpose of me starting this channel. I really appreciate you all watching. I'm with you. If you have any questions, please type into the comments below and engage with our community. Our community is growing very rapidly. It's growing every day. And finally, I add videos to the channel at 2 p.m. East Coast time most days. So make sure you subscribe to the channel and mark your calendar to look out for those training videos. Whenever I release a training video, in the first 30 minutes to an hour, I am going to be around to look at comments and to answer questions in the comment section. So make sure you mark your calendar for 2 p.m. East Coast time, and I upload videos at 2 p.m. East Coast time most days of the week. Thank you so much for watching. Please consider clicking like, please consider clicking subscribe and enable notifications, and I'll see you in the next training video. Thanks.